And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and this is your holiday edition, Friday Manhattan Real Estate Report. Johnny, we're doing a year in review. 2022 is coming to a close. What are all of the things, marketable, actionable insights you need to know? Let's get right to it and let's look at the data, Johnny. First off, I want to take a look at supply, and we're going to look at both Manhattan and we're going to look at Brooklyn, and this is going to be a in-depth, deep dive look at a lot of different metrics. So let's start with inventory levels, and we're taking a look at a different version of this chart, Johnny. We got a black bar, we got a red bar. The black bar is going to be where supply was at the beginning of each year, and the red bar is going to be how we ended that year, Johnny. And I look at supply, and you know what? It's just, there's not a lot of it when I look at where we were. And it kind of reminds me, I don't know, 2018, 2019 kind of inventory levels, more on the restrictive side at this point. Johnny, what do you see?
Yeah, well, you're exactly right. First of all, we have our Santa hats on because we are bringing the goodies of data to everybody today. And no, you're exactly right. When you look at this chart, I mean, it's almost as if you look at 22 from a long-term basis, and it's as if there was no story whatsoever. But really, we talked about this in the last couple of reports. Really, supply has been a very interesting story because the fact that it hasn't really been a story. And a lot of the supply that came on early in the year was absorbed. And we've had a little bit of a buildup of supply here in the last quarter, but not, as the new listings came on, but, really supply has been decreasing the last couple of weeks, right? It's the end of the year.
Yeah.
And it's almost ending the year right near where it began.
Yeah.
So
yeah.
You think about a market, and we're going to get to the pending sales in a second. You think about a market that's slowed dramatically since April, and you're not seeing that in the supply numbers. You would think that, oh, the market slowed. Well, there must be a ton of supply. Well, the answer here is no. And you look back, it's really the same pattern as it was in 2014, 2015, 2016, 2017, 2018, 2019, right? A little bit more in the end of the year than there was in the beginning of the year.
Yeah, very, very seasonal, and sellers clearly just, they don't want anything to do with the market that's not going to give them the bid that they're probably looking to do a deal at. So why waste anyone's time? Maybe you'll just leave it off the market. Maybe you'll rent it. Maybe you'll put it on the market in another 6 weeks when the listing season starts. Let's take a look at how this chart looks for in Brooklyn, Johnny. And we only have a couple of years because that's when we introduced the Brooklyn MLS into our data to cover more of a Brooklyn depth. And I mean, look at this. I look at this story right over here. I look at that red bar. In the last 3 years, this is the lowest level of inventory of where we ended the year. It's just declining right now. Restrictive is how I would describe Brooklyn inventory, Johnny.
Yeah, I would completely agree. And if you're going to contrast that with what that Manhattan chart looks like, right? It's just in the Manhattan chart, you can see that the inventory sort of expanding and contracting. Here in Brooklyn, it's just full-time contraction, right? I mean, that has to do with sort of the nature of this market. I mean, Brooklyn really caught fire. It's been almost a decade, right? That Brooklyn's just been going, and the inventory has reflected that. It's been tight this whole time, and there's really nothing new there.
Yeah, it's just something I think buyers are used to at this point, and sellers, we know whether or not they know it or not. It's a wave that they're riding. Let's switch over to pending sales, the measure of pending sales, that measure of demand. How many listings are in contract and pending in the beginning of the year, which is going to be your black bar, and then at the end of the year, which is going to be your red bar. And this is an incredible chart. This is Manhattan. We're starting out with Manhattan. Look at the decline. I mean, it mimics the rise. So if you just think about it, and all those statisticians out there that talk about regression to the mean, how things go up and they end up going back to where they kind of should be, you can kind of see it in this chart right over here. I mean, look at where we were when we started this whole thing, 2632. We're now below. I mean, what a wild ride. And I think this is why it feels like such a sharp decline in volume. And let's not beat around the bush. Deal volume is down. Transaction volume is way, way, way down. Nobody's denying that. It's not bouncing back yet. It's not actively falling as much. It's just down days, and it seems confused, and it doesn't know which way it wants to go at this point, John.
Yeah, I would agree with that. But the flip side of the story, Noah, when you think about it, is that you look at that big up bar, right, and then it comes right back down. You have to think that in that manic phase between late 2021 or mid 2021 through early 2022, when the market was going absolute gangbusters,
Yeah.
that you had some demand pulled forward. I mean, you have to think that had the market been a little bit more even, we'd probably be seeing this pending sales number a little bit higher, and the height of those two bars a little bit lower. But as it is, I think we pulled a little bit of demand forward. The market was crazy. And yes, you're right. You're absolutely right. The level of pending sales now is sort of, where it was 2018, 2019, not the best years for the market,
Yeah.
but certainly not the worst.
Yeah, I think 2018, 2019. I think this is kind of where we're at, probably more like 2019. Let's take a look at Brooklyn and let's see what's going on over there. I mean, Brooklyn, again, we only have 3 years, and that's a substantial decline in Brooklyn. I mean, again, let's not beat around the bush. No one is saying that we're not down. What we're saying is that we're no longer actively in deceleration, aggressive decline. There's a difference. I mean, you could look at this market. Are we rising? Are we falling? Are we kind of stabilizing in this mixed range? And I think that's kind of where we are. And this chart kind of shows it. I mean, we looked at supply in Brooklyn. We know that's restrictive. That was going down.
Yeah.
Well, deal volume in the last 3 years, we're at the lowest level in Brooklyn.
Yeah, nothing much more to say about that. I mean, we're at the lowest level in Brooklyn that we've got here. But again, you're absolutely right, Noah, which is the missing piece of the puzzle is that supply chart. And when you think about how restricted it's been, even this drop right now is not affecting the market as much as it could.
Yeah, I agree with that. All right, let's go to some price action. This is what everyone really wants to know about it. And I'm not going to show you everything. You're going to get the quarterly reports soon from all the big firms. It's going to have the median sales price, the average sales price, and all that kind of stuff. Here in UrbanDigs, usually we do monthly. Now we're going to do quarterly. We're going to switch to quarterly right now, go into quarterly mode. What you're looking at here is resale condo price per square foot. Resale condo price per square foot. I'm trying to see the broader market. They're in quarterly buckets. I mean, this is Manhattan, Johnny.
Yeah.
Is there a Santa bounce? I mean, I'm telling you, no one's really talking about this. And we started talking about it in our classes that we're running Tuesday and Wednesdays at 11 o'clock, by the way. In case you want that, you reach out to us. We can get you in those classes. And on the market updates I'm doing for firms, don't be surprised if the data that's coming in for October, November, December for Q4 ends up being a little more mixed. And the positive side is going to be on the price per square foot, quarter to quarter. Look at this, 1438 to 1452. I mean, again, like we could talk about how volume is down tremendously, and it is. It is. Volume is down a lot. It's down 60%, 65%. But price action doesn't, it's not down that much, John.
No, it's interesting. And I would not have guessed this. Seeing the decline in pending sales, May, June, July, August, and you can see that now the pending sales chart starts falling off. You would assume, okay, well, prices might be affected. We're going to be doing a year over year comparison. So, all right, well, fourth quarter, you're going to be comparing against fourth quarter 2021. You're probably going to be even, maybe a little bit down, right? Because you had a really sort of chock full of action fourth quarter 2021. This quarter maybe less so. We're up year over year. It's up quarter to quarter. It's up. Now, granted, your mileage may vary. This is as you said it, this is resale condo, but strip away the numbers and just kind of get a sense of what that chart looks like. And it's even. It's surprisingly even. And I think it echoes back to the very beginning. It all comes down to supply. And the idea is that, hey, listen, we've had a drop off in demand, but supply has been so tight that the things that are left, buyers are remaining, have to still compete for what's remaining.
Yeah, and also let's not forget that Q4, those are sales that were signed into contract probably in Q3, if you think about it, and the rental market kind of peaked out about then. There's a lot of people that, the rental market is also playing a role in this whole entire thing. I know it's come down since then. All these components, in my opinion, that's giving a floor to the sales market. It's giving a floor to the sales market. Supply being down, giving a floor to the sales market. Off market rising, floor to the sales market. All of these things are muting the depth of this downturn. There could be a lot bigger units in this, for all I know. And that's what's causing the numbers not to be. It's kind of pulled on the high side. Whatever it is, the data is what the data is, and it's surprising that it's not down more, is what I'm saying.
Yeah,
I think you agree. Let's take a look at Brooklyn. let's take a look at Brooklyn. I mean, resale condo price per square foot for Brooklyn. I didn't even have to change my headline. You know what I'm saying? Like, I mean, it's not reflecting what the real-time data is suggesting, that there's a big price shift. I mean, there's been a volume shift,
Yeah.
you know, but the price shift is not showing itself yet in Brooklyn, John.
No, and you know, just really, this is an extenuation of the conversation for Manhattan. But you know, you think about the media's portrayal of the housing markets, and a lot of it's informed by national data. And you've got some seriously big slowdowns in outside cities in which you had massive run-ups that Manhattan didn't see during the pandemic, or Brooklyn for that matter. And you did see the volume increase in our area, but not to the extent that it did in other cities. And so when those cities start contracting and you're starting to see a lot of more investor units, and you're starting to see some pain on that investor side, and the natural tendency is to think, oh, well, the market's slowing down, it's going to affect New York City here too, prices are going to fall. And so, you know, a lot of that warning has to do, it's almost that Cassandra, prices are falling, but it turns out right now, as it stands, it's more of the, you know, the little boy that cried wolf, right?
Yeah.
You cry, but at the end, like, not much changed here, Noah.
Not much change. I love that analogy right there. And also, you know what? I'm wondering, Johnny, are we going to see most of the change in the median sales price, which is really that townhouse data?
Mm-hmm.
Because I mean, again, what we're trying to look at here is the unit data. All right, that's why we even put the word unit in the subtitle over here. I wonder if we're going to really, because we really did, we saw the price appreciation on the townhouse data, right? So maybe that's where you're going to see the ultimate downfall. We did not do that here. I apologize, but maybe in our future updates, we'll show you what's going on over there.
Yeah, and I think the moral of the story, just to go back to price per square foot, I think the moral of the story is that if you've got something unique, then you might have a little bit more power. You don't have as much power as you had as a seller a year ago, but you're still doing okay. Like, it's a much more neutral negotiating field. But if you've got sort of a run-of-the-mill apartment, you might be seeing a little bit of softness. And so that's probably why prices are not increasing, but they're holding steady. But I think it all comes down to, you know, you talk about unit, it comes down to your unit. It comes down to your local market, whether that's a condo, a co-op, a townhouse, doorman, non-doorman, all these little things contribute to your price. And you really got to segment it on the data side.
And I also wonder if Brooklyn, maybe the downside will show in the next quarter. I mean, I don't know. I mean, I'm asking all these questions. I'm wondering, I'm expecting it. I mean, this is surprising.
Yeah.
This is surprising. It's surprising that it's holding on. I would have expected a little lower. Maybe it's to come. Who knows? Maybe it won't come. Time will tell, Johnny. Let's switch over here to negotiability. We like to talk about negotiability. Again, we usually talk about this monthly. Now we're going to bucket these into quarters and go back in time 5 years so you can see what's going on over there. So the numbers will be different on a monthly basis. I'll tell you right now, you know, that Q4 number is 4.1% from original ask, right? 2.5. If you go on a monthly basis, that's higher, you know, because it was rising, right? So 4.1%, that's probably what you're going to expect to see in these quarterly reports. 4 to 5%, in my opinion, of Manhattan is probably where you're at in terms of negotiability. But again, the question is what situation is that seller in? Sorry, I mean, is that seller desperate? Is it not desperate? Do they have an option of renting this thing? Is that what they're thinking about? And that's what we're talking about here. It's not a situation where you're getting a gap down bid down 10, 15%, and that seller's hitting that gap down bid. I just don't see the fear levels at that level to produce that kind of situation.
No, you're exactly right. And when you start taking a look at the discount and you break it into days on market, if you're looking at the discount for units that have been on the market for less than 30 days, the discount is still at zero. And everyone is getting asking price. That's the median. You're getting your asking price. If you've priced it right, you're going to get your asking price. If you're sitting on the market for longer, 4% sounds about right. And of course, the longer you go, the farther you're going to fall. So don't expect 4% if you've been on the market for 150 days. It's probably going to be closer to 8, 9, 10% at this point. But a lot of that has to do, again, we go back to the data. It has to do with your specific unit, how long you've been on, and the various criteria that affect you.
Yeah, I totally agree. All right, well, at least it's clear that we could see that we're at 2.8, now we're at 4.1, and the question is, where do we go from here? And I think we're kind of in a topping formation right around here, and we're probably going to sit in this range for a while. That's what the data is suggesting. Let's shift. Brooklyn. Brooklyn negotiability. Again, we have less data on this. Actually, we have the same data on this. I apologize. What I mean less data is there's no bars in 2017.
Yeah.
Less data to display is what I really should have said. And it looks like we're missing bars, but we're not missing any bars. Those are just at zero. Those are just at 0%, which meaning, the last ask, they're basically selling it right at that last ask, which is very, very interesting. But let's focus on now. And it looks like we're at about 3.2% for anyone in Brooklyn trying to figure out where you're negotiating. I mean, that's not high.
It's not high. I mean, it looks high because these bars are sort of scaled to the highest bar, which is 4.9%. So the depth of the pandemic, right after the recovery, 5% median is honestly, no, that's tremendous. These are tremendous numbers. And what's just bonkers to me is that left side of the graph, right? 2017 through 2018. I mean, there's just zeros there because the market was just in fuego, and you were just not getting anything.
Yeah, it's an interesting chart. I mean, sellers. I mean, you do have to negotiate. You do have to negotiate, but luckily, it's not that much. And if you find yourself in a situation where you got to negotiate 5+%, then you probably started out your price a little too high, because that's, if you think about it, this data is a function of pricing. It's a function of how sellers are pricing in median. So keep that in mind. All right, very interesting to see where the negotiability rates are, and how they're probably going to come in on Q4, Johnny. And I just want to end today. All right, I want to end today on the market pulse. I want to end on sentiment. So let's go to UrbanDigs. Let's go to the market pulse. Let's click it. Let's go look at that chart. Right, it's all about sentiment. It's all about real-time sentiment, where we are. A lot of the data we talked about here was sales data. That sales data is not reflective of today. That sales data is reflective of what happened 3-4 months ago. Yeah. This is what it feels like if you've been riding around in Manhattan real estate over the last 10 years, right? And if the last couple of years, this is what it's done. And I just want to point out, when I say we're no longer in active aggressive decline, okay, this is kind of a visualization of what I'm talking about. If you look at this period of time here, okay, this is the shift when we were going straight down. That's active aggressive decline. That's when the macro forces are so out of whack that the market's trying to find where it's at. When you see this start to bottom and start to turn around a little bit, right, you're in a different place. It's finding where it overshot to the downside, and it's trying to find out where it is. So we put these zones on here. Buyers, it looks like your peak leverage is in, for the sole reason that inventory has been aggressively falling since this point in time in October. Right. And the reason this is going up right here, and it's more of a neutral market, not a buyer's market, is because supply is down so much. Not a demand thing, a supply thing.
Yeah, you're exactly right. So this is, you're seeing, this is a reflection of sentiment negotiation, and not necessarily a reflection of liquidity. So liquidity is lower because the demand side is down, but at the same time, because there's lower supply, right, the contract pulse is getting pushed up. So you have to kind of take these two, and we're gonna start discussing that a little bit more in depth in our weekly reports, that relationship between the pulse and liquidity.
Yeah, liquidity is down. Liquidity is down. If it feels slow out there, it's because it is slow out there. It's just really interesting to see that price action data, and that's what's going to be the story driving the news. Let's switch this over to Brooklyn really quick. I got to go over here to Brooklyn, go generate that chart. Let's see what's going on with the market pulse. And again, you could see the shift. You could see the shift. I mean, it's just so clear. We were at this level for the longest time, and that is a seller's market level. We have shifted down. I mean, this is a clear chart, and we're kind of at this level. It's neutral zone. It never really got to that buyer's market territory, and that's probably because of inventory as well, But when I look at what's going on here, buyers, you are stuck in a low neutral range environment, which means you got the slight bias advantage. But to me, this looks like it's ticking up just a little bit. And if I had to look forward to the future a little bit, no listings are going to come on the market until about mid-January, the end of January. And then you're going to have a wave of new listings. So what's going to happen is, over the next 6 weeks, this is probably going to inch up like this. And then once we get to mid-end of January and the listings come on, this will probably first go down. All right. Yeah. And then the wave of contract signs will come in February, March, and then this will go back up. And
no, you're exactly right. And I think that's going to be an interesting thing to watch in Brooklyn is whether or not we're actually going to get to that buyer's market territory as listings come on, and we're still waiting for those contracts to be signed. It's going to be close.
Yeah. Yeah. At the bottom, I look, at the end of the day, the shift happened. And you know what? Where we go from here is the question. That's what we're talking about. Either we go up from here, we stay in a stable range, or we go aggressively down. Do not discount the possibility that we could have another wave down. That is entirely possible. We could have a wave up, we could have a wave down. But for all intents and purposes right now, we are just stuck kind of in the middle. We are maybe bouncing a little bit off the bottom, and we're no longer in aggressive decline. And that's an important note to make. So
yeah, I think the very first chart said everything, right? We had the COVID, supply spikes, recovery, supply comes down, right? Those big charts up, down. The story now is there is no story. 2023 is going to have to write its own book because the recovery is played out. We have a lot of more uncertainties on the macro side. So there's a lot of moving parts to this market, and it's going to be a new story altogether. And we're looking forward to telling it.
Yeah, it's going to be a wild ride, and we'll have to navigate this thing together. Johnny, thank you for pulling up all of this chart. That's John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. You guys got questions. We got answers. We're talking about all the signals that's going on right over here. If you want any of the charts that John picked up today, you'll find them over here in just a few seconds. I would love if all you guys would check out the buy signal in play that we put out on December 5th. These are all high-level research notes, messages to give to your buyers and sellers. And that was a few weeks ago. We put that out. And a lot of what we talked about today was planted in today's data as well for you to look at. Outside of that, this has been your annual 2022 Manhattan and Brooklyn review, and we'll catch you next time.